So how do you make a financial plan for your business? Well, here's some simple steps that you can apply right now. All right, so how do you make this financial plan for your business? Because everybody talks about financial planning, it's usually about your home, your household type of income and expenses and budgeting and all that kind of stuff and retirement accounts and all that kind of stuff. But what about your business? Like, what can you actually do to ensure that you have financial health now and in the future? I want to talk about those steps right now. All right, so number one, the first thing you got to do, and I recommend this, is get the book Profit First by Mike Michalowicz. Profit First is a fantastic book because if you're like I was when I started in business, this is what I did. I would start out, I'd say, all right, I'm going to take all this money and the money I make, I'm going to reinvest it into my company. Well, the one thing I learned from Mike Michalowicz is that money you reinvest is not necessarily just always reinvesting. You're really just spending money. It means you don't have profit. Now, I'm all about investing money into your business, especially in those early stages. You might have to reinvest a lot of money into your business to keep it growing and going. But as you start to mature, the problem is that as we get better and better in business, as you get to a point of more stability in your business or better growth or whatever it might be and more systems in place, the problem is we tend to get in this habit of always investing in our business. And this is what happens, that you always invest in your business. Now the profit, the money isn't really coming home as much, and now you get your spouse all, giving you the guilt trip and telling you need to go sleep on the couch, or you need to skip lunch today and maybe breakfast and dinner too, because you're not bringing the bacon home, right? So to speak. You're not bringing enough money home so that you could actually have a real life as well. And that is why you need profit. Again, I'm all about investing in business, but be aware, this is one big danger, is don't always keep investing and spending money in your business. So that's why step one is get the book Profit First, and then decide, what do you want your profit to be? What do you want to bring home? Instead of focusing on, well, here's what I'm going to spend and then whatever's left over I take home, focus instead on, what do I want to bring home first? And then plan your expenses around that. Then spend your money around that point. So for example, if your business is bringing in, let's say $200,000 a year, and you want $100,000 a year lifestyle, that means you need to make sure that your money that you're spending in your business is no more than $100,000 a year. And that means that's going to break down like $8,000 a month, right? And so on and so forth. If you're trying to have $100,000 a year lifestyle, but then your company's only making 120, you might have a little bit of tough time. That means you can only spend $20,000 a year. That's $1,600 a month. You're gonna have a little bit tougher time. And so make sure you build it around the lifestyle that you want first. Figure out what you want to be paid, and then figure out the expenses that are a part of that. Now, one great thing they teach you as well is create different buckets, right? Different accounts for different things. Now, I've used different accounts as well, like different checking accounts or savings accounts. You can do it within the same bank. So if you're gonna set up this Profit First type of system, you can actually set up different types of accounts that only that money that goes to that department or to that kind of expense gets paid out of. So for example, let's just say that you pay a salesperson to sell for you. Well, maybe you have sales coming out of that one account, right? Maybe you have something else from operations, you have it come out of that account. Maybe you have something else from marketing, it comes out of that account. This could also be credit cards. I've done this as well, where I'll use certain credit cards for operations and marketing type of expenses, tracking it there, budgeting it there, and then my money pays to that as I pay it to it, but then I set the limit. And the great thing is, say that I put my spending for marketing at 20% of my revenue. So if you make $1 million a year, that means your budget is $200,000 a year, right? Well, that also means that breaks down to $16,000 a month. So make sure that when you're actually going and spending this and you're tracking it, right? As you're starting to do that, make sure you only do $16,000 a month. Even if it means you just deposit $16,000 into that account that month. So when the money's gone, it's gone. That's one easy way to do it. It's almost like the envelope method. If you remember that, where you have envelopes for certain things, and when you spent the money, you gotta wait till the next month before you can fill it back up with cash again, right? Same kind of thing with these kind of accounts. Now, comes back to another point. One thing you must do in order to know how much you're actually spending is you got to start tracking your money. You need to not just wait till the end of the year at tax time to finally look at your numbers. Don't even wait till the end of the month, because by that point it's too late. You need to be updating this at minimum twice per month. And that's twice. I think you should do it weekly personally, if not more than weekly, to keep up on those numbers and make sure you know where money is going, like where you're spending in different places, what's your actual profit versus your loss. Those kind of things need to be tracked each and every week, if not at least twice a month. So that's one big thing to do. Once you get a good handle on what am I actually spending, now you can go back through and figure out, well, where do I need to make cuts? Where are some things that this money is not getting a good return on my investment, right? Like that good ROI. And start to analyze that. It might even be people. Maybe you've got payroll that you're looking at saying, man, we're paying a lot in different salaries and whatnot. Well, start to look through it and say, well, have I overhired? Is there a position that maybe I need to get rid of? Or maybe we need to cut back the hours on a certain person. Maybe not lay them off, maybe cut back the hours on a contractor or something like that. And so really start to look at these numbers. If you're doing this yourself, it's a simple business, great. But if your business is getting to be a certain point, another thing that can help you out here is hiring like a fractional CFO. We don't know what a CFO is. It's a chief financial officer, right? You might be the CEO, you're the chief executive officer. Well, CFO is a chief financial officer. But if you ever looked at hiring a financial officer, it could be easily a few $100,000 a year that you're paying this person. That might be a little bit out of your price range, right? And so if that's the case, you can also hire a fractional CFO as well. All right, so I've used a fractional CFO as well. Don't really pay them a whole heck of a lot. And I'm only doing a call with them once every few weeks. And so it's not like I need them very seriously because I've been doing my own finances really for 23 plus years now as a business owner. However, I've noticed, again, if I want my company to grow, sometimes I need to get that extra outside help. Now, you might be in your beginning phases, you're not ready for this, and that's okay. Just start simply, like I said, track your money using like QuickBooks or Xero or something like that. Xero is Xero, Xero. Using those kind of programs to track your money, like I said, if not weekly, at least twice a month. Then also be sure to get the book Profit First by Mike Michalowicz and implement that in your business using with credit cards or different types of checking accounts, which by the way is free to set up. You can have multiple checking accounts under the same business name. But again, you can start titling them and have that money go there so that you actually know what money is going where. And most importantly, you've got to have profit. That money has to come back home. And I get it, in the beginning phases, not much money coming back. But as you start to stabilize that business more and more, you need to ensure that that money's coming back home. Because why? Because your business may not be the thing that's going to save you. Most businesses have pretty much zero value. If it's all based on you and your efforts, you don't really have a business. You have a high-paying job potentially, right? You are the business. You are the job. And if you're gone, if that business can't survive, you really don't have a business. And so as you start to grow, get systems in place so you can grow that business. Get people in place, processes and things like that, so that you can step away. And yes, you could sell your business for sometimes multiple times whatever your profit is. By the way, higher the profit of your business, the more it can sell for. And think about that. That is like it's not like the perfect investment, is that it's an investment that pays you monthly income and it also can sell as an asset down the road too. But what I tell people is don't rely on just that. The best thing you can also do is make sure you do have money coming home, that profit, that then invest in other multiple streams of income, passive streams of income, so that you can have that freedom to be in your business, but you work because you want to, not because you have to. And that's another video, so be sure to subscribe on our channel here because we got other videos about the passive income conversation. But I'm gonna come to the last thing that you need as a business owner, especially if you wanna have your finances work properly, is you've gotta have cash. Liquidity. You got to be liquid. You got to have money in place. You got to have money in the bank accounts. You got to have lines of credit, things like that. Start with money in your bank accounts first. I recommend at least 2 months of your business expenses saved, sitting there, you don't touch unless it's an absolute emergency. If we have another 2020 situation where they say you're non-essential business now and they shut you down, you want to make sure you have cash. That was the big reason why so many businesses failed. They weren't cash liquid. They were just going month to month, and if they didn't have money coming in that week, they literally were failing. They were having to lay off all their employees and everything else. You need cash in your business to create that stability, to create that certainty and that financial health of your business. And by the way, when you have more of those reserves, guess what? Banks and credit card companies say, oh, you've got cash, let me give you more. That's the key thing to remember. You can never get lines of credit when you need it. You only get it when you want it. Banks never ever want to lend you money when you need the money. That's when they know it's a bad investment. They want to give it to you when you don't need the money. So that's the best time to apply for lines of credit. One great way to start saving cash rather than just keeping your point nothing percent savings account, or even if you get your Capital One, there's a Performance 360 account that's pretty good you could check out. That might only be paying about 3% a year right now because interest rates have come down. One other option you can look into that's also on this channel you can learn from, so again, subscribe to this channel, there's infinite banking. You can definitely check out more on that topic here right now.